All right. Happy Wednesday, everybody. Welcome to this episode of Crypto with Chris. In my announcement, I talked about today we have QuokkaDokka back on from last week, and we're going to do part two of what not to do in crypto land. And then after that, we're going to dig into some fun charts and talk about how we're going to navigate rotations and how money flows out the risk curve during the crypto cycle and things like that. And it's going to be really cool. But before we get into all that, I again have to remind everybody to follow my Twitch channel so that you can get alerts and also so that you can comment in the chat. You do have to be a follower in order to comment in the chat. And also please comment in the chat. I'm really trying to get 50 followers, which I know sounds super lame, but once I get 50 followers, I can level up in Twitch and then I'll be able to save my videos on there for longer, which is cool. And so, yeah, follow me, tell other people to follow me, and then also follow my Telegram channel because that's where all my alerts are. And the links are in the description for all my videos and also in my Twitch profile. So do all the stuff. And then with that, let's go. All right, Quokka, good to have you back. This is going to be fun.
This is going to be fun.
Okay.
Let's do
Oh,
it.
wait. I didn't share my screen with you. Hold on. Let me do that so you can see it. I forgot to do that real quick. Share screen. Okay. So now you can see my charts. Hopefully you can see my chart. Can you see my chart?
Not yet. Maybe it takes a second to come up. I just see a black screen.
Uh, or you know what? I wonder if you pull up the I wonder if you can pull up the Twitch stream on my um, like you pull up the Twitch stream on your computer. Why is it not showing you
Yeah,
anything? Or I don't know,
strange.
can you like click around or what's happening here? Um,
Uh, all I see, yeah, I just see a black screen right now. Is there a URL? I don't have the Twitch app, but is there a URL link you
oh,
can send me?
maybe,
I can just.
uh, yeah. Hold on. What about now? Can you see that?
No,
Okay.
have a
Um,
beautiful black chart of
yeah,
nothing.
yeah. Or actually, just go into the Discord and I just shared the link like in the general, like a little bit ago. Like it should be like right there.
Okay.
Uh, See if you can
All
grab
right.
that.
All right.
While you're doing that,
Yeah.
I'm going to
You
get
talk.
rolling.
I'll try and
Yeah,
work it
yeah.
out on my
While
end.
you're doing that, I'm going to get rolling on this.
Oh, I got it.
So,
I got it. It's now. I now see it.
oh, sweet. Okay, cool.
That was good.
All right, all right. So what we're looking at here, I wanted to start with talking about 2021, like the late peak bull market, and then all of 2022 and the whole nightmare that turned out to be, and how like I'll dig into kind of how I mismanaged it and sort of my thought process through that, and then I really want to hear your thoughts too on this. So um, first, I'm going to start with going back to like the late summer of 21. Um, I kind of was preparing for this, and again through sort of my tutelage through Bob Lucas, I really played this well. Like I had sold a bunch of stuff and I bought back in almost right at this bottom peak or bottom dip right here. And then I rode these two cycles up. And so at this point, I don't know if you remember, but everything was literally like going insane at that point. Portfolio
Yeah.
all-time highs, everything was just super frothy. People were throwing crazy money at everything. And I was super confused because I was like, well, we're nearing kind of the end stage time frame of the cycle, but I feel like we should be a lot higher. And so at this point in
Hmm.
November, I remember even this is terrible, and I'm going to say this, I'm going to share this, and I feel so bad and so stupid now for saying it. But I remember talking to my mom on the phone right around this point in time. And I was thinking, portfolio, all-time high is kicking. And I remember saying to her, you know what? I'm probably going to be like a millionaire by the end of the year. Like I'm doing that. I'm good. I'm just crushing it right now. And she's like, really? Wow, and of course, that was probably like the ultimate jinx that like ever was.
Yeah.
um, because of course just boom right after that, and it's a bummer too because I remember this, we had like a big liquidation cascade right coming into late November, early December, and I remember when that happened. I was like, oh, that's nothing, this
Hmm.
happens all the time. We had one more or less the previous cycle too. This one was just a little bit bigger,
Yeah.
but it bounced back right away, so I'm like, no big deal, no big deal. Ready for the next cycle, the next 60-day cycle run up, because we had two very clean, perfect, constructed cycles prior to that. And
Hmm.
so I was ready for it to just take off again. And then, of course, it didn't. And so By this point, I was like, damn, that's, it's kind of a big hit. I mean, I'm down a fair bit now. And then I got lucky here in this bit again, and I played this bit really well because I had sold a fair bit and I bought back in pretty low, and I rode this whole stretch from like, late January up to, this chunk here well. And I probably made like 50% of my money back that I had lost in this stretch here. And so
Hmm.
I thought I was doing well, and I should have, of course, looking back, been like, I need to get out completely. I dodged a bullet there, save my ass, and sell, sell, sell. But of course I didn't. And because I thought I was just getting clever, and I thought I still kind of was thinking maybe we have more time to go, but that didn't make any sense. And really, I didn't end up selling until after the, well, not selling completely. I didn't lick or dump everything to cash until after the Luna crash. Thankfully, I wasn't
Yeah.
victim to the Luna crash. I had no connection with Luna whatsoever, but I didn't dump everything to cash until about the 30,000. And at that point, I was just like, God, I just so botched that. I so just, that was so stupid. And I was just really kicking myself. And yeah, and again, looking back, it should have been plain as day. I mean, I'm really going to follow these moving averages again. Big closes below the 20-week moving average is, that's time to get out, like big time. That's time to go.
Hmm.
And so I will really be paying attention to that this time. But I really want to hear your story. So what was that like for you in that time frame?
Yeah, 20, like let's go all the way back to like 2020. So I played 2020 really well. It was basically Bitcoin only, which, everyone has their own sort of like quote unquote PTSD from like a bear market cycle and a bull market. And so coming out of 2718, where even like by the end of 2018, like even ETH just looked like it was going to zero against Bitcoin. And so my takeaway from that was, all these alts are ultimately just going to like pale in comparison to Bitcoin over time, and therefore I'll be Bitcoin heavy. My portfolio was like 90% Bitcoin through all of 2020. So if you looked at like Pico bottom at 4K or say 6K to like Pico, let's say Pico bottom was like 4K and then
Right,
it got to 40K in December of 2020. So that's a 10X. And then I doubled my stack over that time. So I'd kind of done a 20X at that point, uh, at that
right,
very specific moment in time.
right,
And so I went into 2021 being like, for multiple reasons, like I've seen for the last cycle, Bitcoin's the one that really outperforms. I don't want to sell because, my tax consequences where I live will be horrendous. And I didn't really believe in um, most of these alts, and I didn't really have a concept for the idea of rotations. And so I watched most of 2021, like my net wealth didn't really go up much, because if you look at Bitcoin there, uh, it was really like basically flat on the year by the time it was all said and done.
right.
So, my biggest mistakes were not understanding the rotation game, not being able to recognize my PTSD from the prior cycle, which was basically put me in like a Bitcoin only position. And then, I did do well in some things. I think I did sell out a little bit at the that first peak, but I also bought in probably around the same time you did, around that 30K bottom, for the same reason you had, which is like, Bitcoin just has these 30% pullbacks.
Right.
I also, was listening to a lot of podcasts back then, and everyone was talking about Bitcoin 300K, and so it was really easy to stay majority in because it just felt like the cycle was still decently early. End of 2023 was when people were talking about, and imagine selling at 30 when it goes to 300.
Right.
Um, we had that second failed breakout. I was the same as you. I was like, oh, this is another pullback. My biggest mistake was not recognizing that it was the end of the bull run and just like, exiting all positions, exiting stage left effectively. So I sort of did it the same as you. I did sell some right around that top. I did sell some more in December. I did sell some more in January. But as we've talked about before, like one of my things I'm personally trying to work on most is that I can be slow to make position changes. And so again, like my sort of failing one was not recognizing that there were other rotation plays in 2021. So I didn't really make that much from the start of the year to the end of the year. And two was going into 2022. was like the very slow uh, reducing of my positioning. And so I got hit by the Luna, like the Luna drop. I also had a small percentage of my portfolio in Luna, so that got
Oh, ouch.
vaporized. Uh, that was funny. At the time it was maybe 2-3% of my crypto portfolio, so it wasn't huge, but like in dollar terms, it was
Right.
still pretty substantial. I was like, oh my God. Um, but yeah, I think really the failure was not recognizing it was the end of the cycle and just like getting out. And I hummed and hawed over it because it was like, look, I'll probably be paying like up to close to 40% tax on any profits. So I would have to expect that, Bitcoin's going to go down far more than 40%. Otherwise, I might as well just stay in, because like if I sell at 70K and then have to pay like tax, like 40% taxes on like a move from 10K to 70K, like that's like as if I didn't get to sell until it dropped back down to 40K or something.
Right.
So
Exactly. Exactly.
I should have gotten out regardless, but it was certainly like it gets complicated when you are somewhere that you have to also factor in like the taxes.
Indeed. Indeed.
A smarter play would have been to recognize that it was the top and probably get some extremely out of the money BTC put options on Deribit or something.
Right.
And then you wouldn't necessarily have to sell your position and realize those taxes. You could be net neutral if you bought enough puts and you were expecting like, within 6 months to see it go down well more than 50%. So maybe I could have covered myself then, but options are pretty hard. And when you're paying and the price is based on Bitcoin and Bitcoin's at 70K, those options can feel pretty damn expensive.
Right. Did you at any point like get out completely 100% to cash, or did you ride any of it all the way down to the bottom?
I never fully get out. I think I reduced my stack by about half.
Oh,
And,
okay.
you know, may, and then so like my stack in BTC terms is down by half. My portfolio in terms of, dollar term is obviously more than down by half.
Right. Right.
Because I've reduced it in Bitcoin terms by half, and then obviously Bitcoin's half of what it was. So my dollar portfolio is probably about a third of what it was at its peak in 2021. Um, Partly because I sold out, partly because I had taxes to pay, partly because I just have like a smaller percentage of my overall net wealth in crypto right now. Um, at its peak, I think, Bitcoin alone was like 70% of my net wealth, and that was like too high. That was one of those things where it's like I should have been taking profits. But every time I thought about that, I was like, but that's 40% tax on that if I do that. So I
Right.
hodled too long.
I got hit pretty good with taxes too. But I did look, it's funny, another kind of stupid thing that I wasn't even aware of, is when you have like, a net capital loss one year,
Mm-hmm.
you can apply that towards future capital gains in
Yeah,
future years.
yeah,
And so I've got
yeah.
like a net loss applied. So I've got a huge kind of buffer, cushion where my future
Mm-hmm,
gains
mm-hmm.
aren't taxable for a good chunk, going forward, which I'm pretty stoked about. So that was really cool when I learned that. That kind of blew my mind. I was like, oh God, that really saves me a lot. That kind of puts me right back in the game because a big chunk of my earnings that I'm going to make through this next cycle, hopefully, fingers crossed, won't really be taxable.
Mm-hmm, mm-hmm.
And so and it goes forever, like until you like fulfill that loss, however many years it takes. Um, so that was huge.
I
That was
mean,
big for me.
I sort of, that Pico top in November when you're talking to your mum,
Yeah.
I was talking to myself in my head thinking, if we get to 100K on Bitcoin, I need to be doing one of these digital nomad things where I, go get some passport and go live somewhere that has like zero tax,
Right.
because I do expect that the cycle is going to end pretty soon. And if I can cash out and not pay that 40% tax, that's the equivalent of like years of salary,
Oh
right?
yeah,
And
totally.
so, I was having those conversations with myself, and it just didn't quite get there. My life situation, like I didn't move to some low tax, no tax jurisdiction. I think if we sort of see the returns that we're hoping to see, and if the size of my starting capital for this cycle, if I sort of see the sort of returns I'd hope to see, like even like an overall 5x on that portfolio, I think this time around for sure I will be looking to work out how to substantially reduce my taxes because
Right.
Even if you have to go live somewhere else for 6, 12 months, if your taxes go from 40% to zero, you can just look at that and think like, well, that's X years of salary if I was working my job. So I'm better off. Like, even if it's not the most perfect place to be living, you can still travel from there. But getting multiple years of like the equivalent of salary just it makes a lot of sense to me, particularly if in this conversation we start talking about the rotation game,
Right.
because for me personally, and I think for most people, if they ever go back and look at their performance over time, but like basically all of my gains in crypto have been from like the long-term holds. And when I say long-term, it's like year plus. I'm not very good at the short-term trading, and I definitely try to do that a little bit in 21 to very mixed results. I have a better idea of how to do it this time around, and I will use a small percentage of my stack to do that. But if you are trying to do the rotation thing, depending on which country you're in, if you're somewhere like the US or I think the UK, Australia, these sorts of countries, I'm pretty sure it's the same in all of them. Like, if you're buying and selling something within a year, that's treated as like income tax, not as capital gains tax, which can get
Exactly.
pretty
Yeah.
brutal pretty quickly.
Right. Yeah. So when you were so in 20 after the peak, so like throughout 2022, were you doing like really any kind of technical analysis or looking at these charts or trying to gauge, or base your activities based on these charts at all, or how were you navigating that?
The frustrating thing is, in hindsight, it always looks obvious when the end of the bull run is because you can
Right.
just see it on the chart.
Sure.
But you when you're going through it, you don't know. I mean, like to your point, I sold some in November, I sold some in December because I felt like, oh, maybe this is the end of the cycle. But I didn't sell most of it. And if you look at January, we're still not that far from the peak. Even in
Right.
February, March, into April, it almost looked like the first half of 2021 was happening again. It could have just been a temporary 30% pullback before we continue upwards. It wasn't really until that 13 in April with Luna and
Right.
then 3AC that it
Right.
was like, all right, we're two things are confirmed. One, holy shit, we really are in the bear market. And two, all of the discussion around like, well, Bitcoin goes down less each cycle and is so much more adopted now that like, how much will it really go down? Is it even possible for it to go down 50% this cycle? Like some people thought, you know,
Yeah.
maybe the worst we get is a 40% drop. And to go back to my previous comment about my taxes being 40%, well, if it's the biggest drops 40%, then why would I sell? Because my taxes, would be the equivalent of selling to a 40% drop anyway. And
Exactly.
so I wasn't doing a huge amount of looking at the chart other than just to sort of see if there was confirmation of bear market. I was using the charts to sort of like get myself out of non-BTC positions. Like, all right, like, don't be slow again, get the fuck out of these alts. Um, but my I wasn't doing anything much more sophisticated than looking at like support and resistance levels.
Right.
This time round, I have a few more indicators that I sort of am using, and I don't think any of those indicators are going to be, none of them are perfect. Really, all I want indicators to do is to help me remove emotions from my decision making and give me basically like buy and sell triggers. Because I think even like an imperfect indicator is going to be better at like identifying, alts to when to enter and exit alts than like me trying to in the moment with all of the emotions going around in my head make those decisions. Because I'm always too slow when it's just like you're thinking like the what if, when you're thinking about selling an alt.
Right.
And I think actually if I just used even something as imperfect and as basic as like the weekly megatrend, like I would have massively outperformed myself than
Right.
based on my emotions and support and resistance levels alone.
I think I have that here. Let's see what that looks like. Um, yeah, totally. I mean, it was pretty spot on here at the top for sure.
Yeah.
Um, and then yeah, provided you didn't get caught up in this this little bit right here, um,
Yeah.
which
I
would have
mean,
been confusing.
even if you did though, that position is going to be basically net zero, right?
Right. Yeah. Um,
So,
yeah. Yeah. No, I agree. And I think that's a, perfectly good approach too. Yeah, I'm going to stick with these moving averages that I've got, like I've kind of pointed out. But yeah, I like that. I like that idea also. Um, I'm trying to think if I had anything else I really wanted to touch on in terms of the the mistakes I made back here. Other than don't ever think that, don't tell your mom you're going to be a millionaire next month. um,
we talked about it last week. You know that the list of things that if you ever find you should write a list of if I ever do any of these
right,
things,
right, right.
like I have to sell X% of my portfolio. One of them is like bragging to your mum that you're soon going to be a millionaire. If that happens, you immediately have to sell 20% of your stack to cash and like smack yourself on the face.
Exactly,
Uh,
exactly. That's going to be at the top of my list, at the very top of my list. It is funny. Like, I can't tell you how many times I've looked at, so I use this app called Delta Portfolio Tracker. I've been using it since way back in the beginning, since day one, to track my portfolio, and it, adjusts with the market prices. And so, especially like in a bull market, I'm looking at it all the time. I'm, refreshing it multiple times a day and just tripping out. And like, I can't tell you how many times I've looked at it and gone, huh, I wonder if this is the top, you know? And I
yeah.
swear, if I would have sold at half of those times that I had wondered that to myself, I would also be a lot better off than I am. And so I kept telling myself, the next time I say that, the next time I look at this stupid app and go, God, this seems like it could be the top, that it probably is, it probably is. Um, so that's another thing I need to put on my list for sure.
There's that, when you're thinking about the sort of like year plus timeframes, um, because you only really want to get out at like the maximal top and maximal bottom, ideally, right? But there are
Right.
like when you do find yourself having those moments of just like, you know, dreaming about like getting a foreign passport so you can turn your taxes to zero, probably a great time to sell
Yeah.
a percentage of your stack. Talking about the same thing. But there's a flip side as well, right? Like that 63, the very bottom there at the end of
Yeah.
2022, when FTX was crashing, like um, a great, like a great sentiment bottom signal. If you are on Twitter, is like seeing like the biggest names in crypto like rage quitting. Like that candle is basically where Kobe rage quit, for example.
Right.
And when you see someone that's like that much in the center of crypto and has been for so long, just basically throw up his hands and be like, "I'm fucking out. This is dumb. It's over."
Right.
Like it's hard to imagine like the most fervent believers, like the point at which they emotionally capitulate, that's probably a bottom, right? Because everyone else will have capitulated before then because they have less conviction. When the max conviction people finally capitulate, that's probably right around the bottom. Um,
Right. Um,
so yeah.
That reminds me one, I want to, before we'll move on to the rotations here in just a second, but what you just said reminded me of something that I did want to touch on real quick. Let me go over to this chart here. So one of the things that I used in terms of picking the bottom to know when to get back in was the cycles tracking. But what we had here, I wish I had the year. So real quick, let me just kind of zoom over to this one. Oh, my numbers are gone. Where the hell my numbers go? Oh, maybe they're,
I mean, the 4 years, while you're pulling that up, like the four
yeah.
year cycle of three up and one down with Bitcoin and the rest of crypto follows. I mean, there's no reason to not think that that is true until it's disproven, and it's not been disproven yet.
Right.
And if you were to use only that as your entry and exit signals, you would outperform 98% of people trying to make money in crypto.
Right.
Yeah.
So I don't have my yearly numbers here, but let's go back to this. Okay, so what we had happening was, just pretend for a second, this was the peak. So this would have been like, month 35 peak. And then typically after we have the peaks, we have like a 12-month-ish, bear market. And so on
Mhm.
this candle right here, this candle coincided with basically the end of a 4-year cycle, the end of a daily cycle, and the end of a weekly cycle, all on the same like week, basically the same day even. And so
hmm
to me, this was like the mega trigger. Like this was the, in terms of timing standpoint anyway, cycle timing standpoint, this was the bottom. And so literally I based my buy back in on that notion. And I mean, as we can see, so far so good. But literally that's entirely what I was going on. I was like, okay, we've had the bear market, it's played out, we've had a lot of sideways action, yes, but we're everything is aligning right now. All the stars are aligning in terms of like cycles timing with daily, weekly, and yearly, all right on this day right here. And so that was my big trigger for the buyback in. And yeah, and I'm gonna, so far that paid off, like I said, so I'm gonna keep using that.
Yeah,
uh,
you nailed that. And I got in later, and that is a bit of a regret of mine. I didn't find things like the mega trend and that until like mid-January. And I remember even then just being like, motherfucker. Also, Delphi has those monthly reports they would
right.
give out, which had the Hull suite in it,
Yeah, yeah,
the Hull
yeah.
indicator. And that thing also turned up. But I think by the time they released that, it was already mid-January or something, that report. So again, that was like a bit late. That you fucking nailed that. I was a bit late. I also didn't have high enough conviction as I should have at the start of a 4-year cycle. I should have just gone, had the confidence to go bigger in my bet early on. Like I started buying up, but I sort of started buying up for weeks there, whereas I should have just had the conviction to throw a big chunk in but you have to remember, like for people, like psychologically, after a year long downtrend where your wealth just goes down and down and down and down and down, to be able to suddenly turn around and have like high conviction to do like a large position
Right.
is definitely difficult.
It
Um,
totally is. At that point, I was 100% in cash. I had been in since, earlier in the year, whatever, 6 months leading up to that. And I kind of, what I was thinking in my mindset at that point is, well, could it go down to, whatever, what was it at, like 16? Could it go down to 13? Could it go down to 12? Could it go down to 10? Yeah, maybe. Um, but like I felt like even if it did do that at that point, it wasn't going to go much further than that. And I still thought it was going to go back up. And so it's like, I only was seeing it as not so much downside risk, like I have the potential to lose money. It's more like my entry won't be as good as I maybe hoped for. But either way, I'm going to be fine in the end, fast forward a month from now. Was sort of the mindset that I took into that. And thankfully it didn't go down another, 50% or whatever, because I would have been annoyed, but I wouldn't have been freaked out. It would have, I would have been, I still would have been able to sleep at night. I just would have been kind of pissed off, like I said.
yeah, yeah. There's a difference between, and this is another one of these. Like I'm pretty frank about the things I'm working on. This is another one of the things I'm working on as well, right? It's like there's a difference between being down in percentage terms and a difference in being down over time. So, you know, yes, it could have gone from like 16 to 12 or to 10, it could have gone
Right.
down like another 40, 50%. And if you were to snipe the bottom, over the course of a bull run, those additional, it's like literally extra multiples of gains that you would have gotten. So there's this temptation to try and get the pico bottom.
Right.
But, if you were to get 16, how many months is it likely, that you would be underwater on that position? And it's like, well, look, maybe 3 to 6 months max I'd be underwater on this,
Right.
but ultimately it would be a really good entry point. And by the end of the cycle, like the multiples I would get is still really good. So people tend to think about like how much their portfolio could go down in percentage, but not so much in terms of like how many months could that position be underwater. And because it's such a volatile market, you could be underwater for possibly a couple of months, but ultimately, that entry point that you get could be great. And so, you know, as soon as you get through those,
Right.
3 months where you're underwater, when it does start going positive again and it goes up so much that like you spend the next 3 years in euphoria because like the gains you get are amazing. So, it's something that I need to consciously think about more. It's like even right now, right? Like there are some, and we can talk about this in a second with the rotation game, but like there's positions I've been patiently waiting to get into for like some of these rotations that I want to do, and I'm almost at the point now where it's like some of these alts haven't gotten down to places where I think they could, but for a portion of them, I think I might just call it and enter those positions, even though I think I could get a better entry point, just because, you know, the max regret would be I didn't quite get my perfect entry, and then it pumps, and I get a much worse entry. And had I bought now and maybe spent a month underwater, I would in month two be very happy with my position. Whereas if I don't buy now, I could be happy because it's gone down a little bit more, but then I could spend the next 2 years wishing I'd bought at this point and having regret because it got away from me. So it's almost like, where do you want to have your regret, right? It's like,
Exactly.
do you want to have your regret now for the next 2 months? You're like, fuck, I got in too early, it's down. Or do you want to have your regret for like the following 18 months where you're like, fuck, I should have gotten in then. It's gone up so much more now. And like you've like put all of your regret on like the
Right.
next 18 months versus the next two.
Right.
So
Um,
that's a sort of framework I'm trying to have in my head. If we're going to turn on the rotations, just thought like, is there any questions from people that we should look at before we change?
there aren't, but there was one final last thing I wanted to touch on real quick. So in this stretch here, leading up to this, when it did bottom out here on this, basically the bottom, I did actually set a bunch of low ball orders, like in the event that it kept
Mm-hmm.
going. I had orders both for ETH and Bitcoin. I had ETH orders at like 800, and Bitcoin orders at,
Yeah,
9, 10, 12, all along up and
yeah.
down through here. And so I was like, I'm ready for it to come down to here. But I think once it reversed a bit and came up and set this high and then was ticking back into that, again, that cycle timing band, I kind of felt like if it was going to go down to that low, it would have by now already. And so
Mm-hmm.
that's when I sort of had the conviction to cancel those orders, go ahead and buy back in, and cross my fingers. And so there was a little bit of a process that went into. I didn't just like sit there and ready go, like
Yeah.
I was kind of prepared for it to go lower, and I of course hoped it would, because that would have been great to buy back even that much lower, but it didn't. And
Mm-hmm.
so I didn't want to like miss the bus, um,
Yeah.
and so that was sort of where I was coming from there. Anyway, okay, let's go to rotations. Let's see, hold on. I had a couple. Well, we'll go to this chart. I think it's here. No. Uh, Jesus, where am I? Here. Nope. Here. Okay. Let me kind of clean this up for a second. So I think last time, does this look familiar? Did we look at this? um,
I actually don't think we looked at in our last session.
Oh,
Maybe you
maybe
did it on
this,
a different
I
one.
might have done that solo by myself, or maybe it was with James. I
Yeah.
don't remember. Okay, well, let me touch on this real quick, and then I'll have you go. But what I'm looking at here is basically just ETH dominance on the top and Bitcoin dominance on the bottom, with a bunch of like significant dates denoted, like cycle
Mm-hmm.
lows, cycle highs, uh, like the halving, the COVID crash, that kind of stuff. And then
Yeah.
prior to today, when I was thinking about it, I was like, well, okay, this is cool for Bitcoin and ETH, but what about everything else? Like, because alt season isn't necessarily just ETH, and ETH doesn't really dictate what alt season is either. It's sort of its
Yeah.
own thing. And so I added another pane to it, a third pane, and I added this. Now this chart looks super cluttery, I know, but it does make sense. So this is just this is called the others. I don't know if you've seen this symbol before, but it's just others. And what others means is basically it just lops off the top 10 crypto market cap project. So Bitcoin,
Mm-hmm.
ETH, pretty much all
Mm.
the big stable coins, all the way down to top 10. So like Doge, Cardano, BNB, like a bunch of big stuff. All of that is blown out of this. So it's everything from number 11 down is this market cap on the bottom.
Mm-hmm.
And I think that's super interesting, because that's what's going to give you, I think, a much better perspective on sort of what alts are doing. And I wanted to note this one specific thing, because it sort of stood out to me a little bit, was the 2020 halving. Like what happens around here? So that's kind of almost right in the middle here we got. And if we look at this, Bitcoin generally went down. I mean, yeah, it had a bit of a peak up for a second, but it sort of was overall on a generally downward trajectory. Um,
Yeah.
it's interesting. It's interesting too to look at the alt chart versus the ETH chart, because it is different. Like ETH had this big peak right here, where ETH kind of was doing its own
Mm-hmm.
thing. Let me go to the beginning of this. Yeah, and alts more or less were still going down, but then once we get into the beginning, like the very start of 2020, 2021 rather, alts just blew up. And if we
Yeah.
went back to that Bitcoin chart and look how Bitcoin took off at the beginning of 2021, but really it was massively losing market share dominance to altcoins and ETH, but altcoins in particular, because this is when like the likes of Solana and Luna and a lot of those projects, maybe Uniswap even, were just like going to the moon. And
Yeah.
so um, then I was like, okay, well, this is all really interesting. What can I do in terms of like an indicator to kind of get a sense of what these rotations might look like, or what might be flagging a rotation? And I kind of
Hmm.
came back to that divergence indicator that I've been using because I feel like it's pretty good at, maybe it's not going to tell you for sure that a divergence is happening, but it's going to identify, it's going to go, hey, it's time to pay attention. It's time to go, hey, look, we've started to get some divergence here. And especially if we start seeing them across the board on all of these charts going in
Hmm.
different directions, I think that's going to be, again, just something to stop and take notice of. Like maybe now is when I need to start looking at my alt rotation. And then, of course, it's going to come down to individual projects, individual sectors, and you're going to want to look at individual charts against both Bitcoin and ETH. And we'll get to
Yeah.
that. But I think just as a general, overall, kind of holistic sense, I think a layout like this will give you a good sense of just sort of the which way the winds are blowing, so to speak,
Hmm.
across all the sectors. And then I took this same thing and I was like, well, what would this look like if it was just kind of laid over the top of each other? And so I threw that up here. Um, and this top one is Bitcoin. It's all logarithmic and it doesn't go back that far, but top one is Bitcoin basically because it's 50% market share. Next one is ETH market, and then the bottom one is just the others. So this is an
Hmm.
interesting way to look at it too. And right now you can see ETH is really just holding steady, cruising sideways. Bitcoin is ticking up, and alts in general have been trending down. Although maybe the bottom is in on alts. You could ask
Yeah.
yourself, looking at that. Um, so
That's a
yeah,
really interesting. I haven't seen the others dominance one before. That's really interesting. I wonder whether if you did for the Bitcoin and ETH dominance ones, if you remove Tether, USDC, etc., whether that would change your indicators at all. Um, that's
I
something you could
do
look at
have I
sometime.
do have one here. No, I get these all mixed up. Somewhere in here, maybe this one. Yeah, no, um, never mind. I can never find them. Oh, this one. Yeah, so this one is
Yeah.
just Bitcoin market cap with all of the big stable coins subtracted
Yeah.
from the mix.
Yeah. Yeah.
Um, Maybe I could add to this chart too to kind of do some factoring there. But yeah,
I,
um,
I think it's worth looking at that one now because, like the prior cycles, stable coins were just so small as a percentage of the market. And now they're, comparatively big. And so I do think that probably changes what these sort of charts will look like in the future. Uh,
absolutely.
and we,
Yeah.
we don't really care what the stable coin market cap is, uh, at least not from the perspective of what a rotation is looking like.
Right. Well, that's kind of why I like the others because I think outside of DAI, maybe it it doesn't factor in any of the big stable coins like USDC,
Yeah, yeah, yeah,
USDT,
yeah, yeah,
BUSD. All of that stuff is in the top 10, and
yeah.
so
Hmm.
that's
Hmm.
that's blown out of there. Um,
Yeah.
so I think this is a good
Yeah,
chart here.
yeah, I really like that. I actually wrote a note to myself to get that one and add it to uh, my charting later. I remember listening to a podcast in 2021, and it was like Kobe and a couple of other people, and Kobe was sort of making the comment. It was like this was like May 2021, I think. He was talking actually, he was talking with Suzu and Ledger
Was it
and
like an
someone else.
up only
It
episode or
was an
something?
up only, yeah.
Yeah, yeah,
And he was sort of making the case that it was like maybe it's never the right option to own Bitcoin anymore because when it's a bull market, ETH goes up more, and when it's a bear market, you just want dollars. And the funny thing is, if we look at the ETH dominance chart, I mean, maybe that's actually not correct because ETH really hasn't done anything and hasn't done anything against Bitcoin in forever. So
well,
I
it's
think
funny.
people always,
Perhaps when he said that, he wasn't far off because I mean, it could have been somewhere in this time frame, and he would have been
yeah,
right in that ETH generally does outpace it. But since then, it's been interesting.
yeah. And so I do think people should always have like the majority of their assets in Bitcoin and ETH to be held for the full cycle. And the purpose of those allocations, and that should probably be, at least 60% of someone's portfolio, um, if not like 80%. Uh, but the reason for that is so you don't fuck up the cycle, right?
Right, exactly,
Just hold
exactly.
those all the way to the end of probably 2025, sell them when the pie indicator goes, and just like don't touch them before then. And that's kind of like like giving you at least like a baseline level of success, which could be, even now, like, a 5x or more, even today, right? Uh,
Right.
if not a 10x. Maybe that's being a bit hopeful, but like you probably get maybe a 5x from doing that. And that's just so you don't fuck up and you don't have infinite regret at the end of the bull run where you're like, how could I possibly have fucked up? And so many people have by just going all in alts and fumbling bag after bag after bag, chasing pump after pump, and just like losing their stack. So you always want to have a majority in there, and I do think like let's just say like 30% of your portfolio is Bitcoin, 30% of your portfolio is ETH, and 40% is like alts. Fine,
Right.
and just hold them. And I think ETH should definitely be held. But in the same way that Kobe was saying in March 2021, like maybe you should never hold Bitcoin actually because it just doesn't go up as much as something like ETH. You know, I start to wonder whether the question is like, well, actually, maybe you should not hold ETH because other things are going to go up more than that now. Um, I, I would never not hold a significant portion of ETH because I just think, it's risk return wise, like
Right.
possibly the best asset. Maybe Bitcoin is a
Absolutely.
bit better, but the returns are just a bit less to be expected over time. But I do think going only in ETH is probably like underserving yourself in this cycle.
I would agree totally. And I've gone through that same thought process. At first I was like, I'm just going to stack ETH, and trade alts to stack ETH, and because of that,
Yeah.
because like, and I remember even thinking, and a lot through this time frame here too, that like, what even is Bitcoin anymore? I feel like there was a long period of time where sort of Bitcoin kind of lost its narrative a little bit,
Mm-hmm. Yeah.
ETH was
Yeah.
really taken off, especially because of DeFi and because of all the stuff that was going on with that, and NFTs, were really driving ETH like big time. And everybody was like, "Wow, ETH has an amazing future. Like it's just the bedrock of all of these, amazing technologies." And what the hell does Bitcoin do? It doesn't do anything. Why are we even here? You know,
Yeah.
um,
Yeah.
and really it kind of took. It's funny because going through the bull market. I mean, ETH did do pretty well in terms of holding its own against Bitcoin, as we can see, through that period. But you know, enter 2023 and we've got suddenly all the macro stuff, all the fundamental, all the banking crises, and the suddenly Bitcoin looks very appealing to TradFi and to
Yeah.
all everybody. I wonder if it's just because people kind of finally realize, oh well, hey, it's been around this long and it's survived all this crazy up and down, and meanwhile the rest of the market looks like shit, and suddenly Bitcoin is outpacing all the traditional asset classes and equities, and maybe Bitcoin's a thing, and suddenly, I mean, clearly, like all these asset fund managers that are applying for ETFs, they wouldn't be doing it if their customer base wasn't asking for it,
Yeah.
wasn't wanting
Yeah.
it, and so yeah, suddenly it has a new narrative, and I think it's great. I think that's actually really good for the space. I think that
Yeah.
overall that it needed to happen because it's still by far the biggest. It's bigger than everything else combined. I mean, literally looking at this chart,
Mm-hmm. Mm-hmm.
by a little bit.
Yeah.
So like, it needs to have something to drive it because otherwise, I don't think ETH could necessarily do it on its own. And so certainly nothing else either. So I'm glad to see that this is taking place the way it is, and that this cycle is unfolding the way it is, and that this new
Yeah.
money is potentially coming in, or it when, not if, I guess, as people are saying. So um, but still I do think that rotations will be a thing. Clearly all this money is going to come in, although I think a question I have is, one thing we've talked about is all this money is going to come in like into Bitcoin through these ETFs, but none of
Mm.
that money has a direct there's no mechanic for that money to then trickle into ETH and further out the risk curve because it's all going to be
Mm,
in ETFs through TradFi
yeah.
institutions that are bound by SEC regulations and everything else that they're bound by. They're not going to buy a bunch of Bitcoin ETF, and then suddenly next thing you know they're buying Uniswap or whatever. um,
I mean, that is a great point. That's a really great point. Yeah.
so I do wonder how that's going to play out. My only hope is though that the big money coming in will drive the price up with Bitcoin enough that the rest of the retail space will go, oh hey, now it's time to get back in, and a retail mania will of course play out the risk curve in these rotations that we're talking about. But until there's a mechanism for this institutional money via these ETFs to do that, that's not going to be a thing. I still think it'll happen, but maybe not quite to the extent that it could, obviously. Um, so I'm just curious to see. That's something I do think about, though.
Yeah. I mean, I think that would take a lot of people by surprise if Bitcoin like substantially outperformed ETH this cycle. I don't think many people would be expecting that. But the argument you just made there would be like a strong if that was to happen, what you just described would be probably the primary motive, like the mechanic that would happen. Um, the other I actually think that's really interesting. The other thing about ETH is Bitcoin really stands alone in that it's quote unquote the first. It's the only one that's really going for the store of value narrative, despite what like a small group of percentage of like people that are really enthusiastic about Ethereum might say, where it's like ultrasound money is what the bankless people like to call it. I don't know that I really buy into that narrative. But like Bitcoin doesn't really have any competition in the store of value space.
Right.
Whereas there's loads of other L1s, L2s that are all competing to be a smart contract chain with Ethereum. So it has a lot more competition. When people get on, like Larry Fink gets on like mainstream media or something, it's like, I like crypto because it's like, you can't create more of it. It's like, no, you can't create more Bitcoin. And so that's an argument for why Bitcoin could be like a fixed supply store of value. But people are constantly creating new L1s, new L2s, new meme coins, new bullshit scams in the rest of the crypto market. They're very much, we've gone from one asset in crypto being Bitcoin to there being tens of thousands now. So like the rest of the space very much can have new supply created. And that includes L1s, L2s, etc., that can compete with Ethereum. So
Right.
there definitely is, like, if Bitcoin was to outperform ETH this cycle, there's a bunch of mechanisms through which that could happen. Institutions can only get access through spot ETF, and that doesn't allow their money to further flow into the ecosystem. Or, some other competitor L1, L2 just like sucks up a lot of the smart contract, the sort of blockchain value.
Right.
Like there definitely are mechanisms. Now, I'll still definitely hold ETH because I just think from a risk reward play, it makes a lot of sense. And you want to have a majority of your assets in things that you think have a high confidence of not suddenly going like teleporting to zero like Luna did.
Right.
Um,
Right.
but on the topic of rotations, if you do look, a lot of the sort of rotations where alts did really well against ETH was actually at the start of January 2021 when ETH was doing really good against Bitcoin. So the correct thing there was actually not to hold ETH; it was to go straight from Bitcoin into alts.
Right.
Versus
Right.
going from Bitcoin to ETH and then into alts. So I do agree with you. The way that I want to play the rotations basically is if my portfolio is going to be, this is simplifying and kind of hypothetical, but let's say it's like 30% Bitcoin for the whole cycle, 30% ETH for the whole cycle, 40% spread across 10 alts in different sectors. If any one of those has a massive pump against ETH, I'll sell 30% of the profits will go into US dollars for taxes. 30% will be put into my ETH full cycle bags, not to be touched again. And the remaining 30% of profits plus the initial capital from that bet will go into like the remaining 9 alts that I haven't yet had their rotation, but I'm hoping that they will. And that's how I build my rotator stack while also taking profits and like covering taxes. But I I still think that the right choice. It used to be the case that you would want to like, you know, consider like look at your bag in BTC terms, not in dollar terms. But I
Hmm.
think if the goal is to hold Bitcoin for the full cycle and then do the rotations to outperform ETH, then you're right. I actually will now be looking at, um, you know, the performance of my bags against ETH, not against Bitcoin.
Right, right. And I do too. I go back and forth, like you said, and I'll continue to. I think it's important to have both of the perspective. I mean, really, you need to, because that's all that matters is that everything is outperforming those two that you're in.
I mean,
Um,
ideally, in a dream scenario, you find some asset that you have high conviction on that you think will be a very strong narrative that's at support against dollars, Bitcoin, and ETH, with some nice indicator being like, yeah, it's turning up, and then you get a position in that. Very
right,
hard to find those, but like you do care about the Bitcoin chart and the ETH chart, like the pairs when you're
right,
looking at alts,
right. Exactly,
because you don't
exactly.
want to be buying something that's like down only against ETH. Like that's not a probably not a great bet.
Well, no, of course. I mean, obviously, why hold it in that case? Another
Yeah.
thing that came up just a second ago when we were talking about Bitcoin, and in terms of TradFi, being able to uh, access the rest of crypto, is the same thing with the ETH staking. There's currently no sort of mechanism in place for institutional money to access ETH staking. And I know we've had people like Raoul say it's going to be this thing, it's going to be the digital bond market, it's going to be all of this stuff.
Mm.
And currently there's no way for them to get exposure to that directly. I mean, they're not gonna they're not gonna fire up their own validator, obviously.
Yeah. Yeah.
They're not gonna buy a bunch of Lido. They're not they're not gonna, and probably not even, they're gonna, outside of maybe a couple of exceptions, they're not even gonna utilize like a staking as a service company where they're just hosting the server, but the company owns the ETH and all the stuff within it. Like even that, I feel like is just too clunky for institutional money to engage with. Like
Yeah, excellent point. Excellent point. I think this cycle we might get like people are applying for a futures ETH futures ETF. Like I think we could see that this cycle.
yes, yes,
Even if we got the ETF for spot ETH by the end of this cycle, like I don't think that that's hugely likely, but I think that's possible. But you're right, both of those, I don't believe that they would have some mechanism under the hood to stake that ETH as well. I think that would be too far out on the risk curve for these TradFi companies trying to build these ETFs to like consider. So if
right,
you were to have the argument that like people are going to use it as like the risk-free rate, blah 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 blah, get the
right.
interest on it, etc. That's probably not this cycle. It's probably next cycle, which is like after the 2026 bear market into 2027 and onwards to 2030. That's when that is more likely to be a serious impactor to the ETH price.
I think so too. And then I guess another thing I'm thinking, well, is okay, well, maybe some big company, maybe an asset manager, maybe somebody like a BlackRock or whoever comes along and somehow gets some product approved that gives exposure to like ETH staking in some direct or indirect way, however that might work.
Yeah,
What does that do for the centralization too? Like if suddenly, potentially billions of dollars of this institutional money goes into ETH staking, in this hugely sort of concentrated fashion, um, that I haven't really gone through that whole thought exercise yet, but like I feel like there's some centralization concerns that would come from that too, that I need to process. And so all of that is like floating around in my head going, how is this going to work again with ETH staking? I mean, I get that it's cool and it's definitely like a viable thing, and I think it is a thing that gives a strong future to ETH, and certainly ETH isn't going anywhere. But in terms of it becoming like this institutionally adopted like mechanism, interest or a risk-free yield, for TradFi, it's like, yeah, it's a ways away. It's a ways away for sure.
yeah. I think I can. I mean, I'm in this space, so I'm an early adopter. I think sometimes I can be too slow to enter and exit my positions. But I think, Raoul talks a lot about this stuff, and I think he is often like substantially too early. Like he re-entered a lot of his positions back in April last year. He's just too enthusiastic, too gung ho. I like a lot of what he says, but there are some things like the staking, like the risk-free rate, et cetera, et cetera, et cetera. I think that is like overly optimistic thinking. I think he can get carried away, and it's possible that he 100% believes it. It's also possible that it's just partly like a marketing thing. It helps him to build his business. You don't build a business by being lukewarm on crypto if you want to build a crypto company. Um,
Sure.
but yeah, I think while staking could be something many years from now, uh, I don't think it's going to have a huge impact in terms of institutional adoption of ETH this cycle. But I do think it'll have things like Lido pump. I definitely think liquid staking derivatives will have a pump. And maybe this is a good time to talk about
Yeah,
rotation.
yeah. I think Lido is actually going to be a big player in this cycle. And let's look at that for a second. Um, yeah. I mean, this doesn't tell me much right now at the moment, but yeah, no, I definitely. Well, this would be a good example of looking at something, on an individual basis. We'll just use, against Bitcoin, for example, because that's what I have pulled up right now. But
Yeah.
so this yellow line here is basically the yearly open for Bitcoin, the price level yearly open for Bitcoin, and we can see Lido's now underwater against Bitcoin on the year, even though it had this big mega pump, early on in the in
Yeah.
the in the year. Um, but this is kind of something I'm going to be looking for, and so um, I don't really care how low it goes. I feel like against Bitcoin, it doesn't. To me, that doesn't really matter. It's more just going to be when does the
Yeah.
trend reverse,
Uh,
and when does it become time to buy? And actually, let's look at the USD on the weekly too. Um, yeah, I
This
mean
this is
it's
actually a great chart to talk about because we can talk in real time about how difficult it can be to sometimes enter positions and where that thinking I was having earlier on this conversation about like, do you want to be underwater in terms of time or in terms of percentage? And Lido is one of the ones that I want to have in my rotator portfolio at the start of this bull run. And the difficulty I have here is it's sort of bleeding out since the start of the year against dollars, against Bitcoin and ETH. It's
mhm,
at support right now, but like it looks like it could break through support. It also looks like if Bitcoin has a pump, it's set to go quite a bit down against Bitcoin.
right.
But also, we could look back in 6 months and be like, well, that was such an obvious support bottom, and it just goes up only from here in the coming months. And so I'm looking at this being like, should I be getting into a position now, or is this about to do like a 50% drop against Bitcoin because it's like bounced so many times on this support level, and we know that typically like the way rotations happen is Bitcoin goes up first, then ETH, then alts, and buying here would be silly because Bitcoin is likely to pump first, and if Bitcoin pumps, Lido will likely go down against Bitcoin. If Bitcoin dumps, it's also likely that Lido would go down against Bitcoin. Uh, I'm sort of like mentally struggling myself with like, is this a great entry point, or is the entry point against Bitcoin actually 50% lower? And I have not been able to come to a decision on whether or not I should be buying here or if I should be being patient. I know I'll be frustrated if this does turn out to be the problem because I'll be like, well, it's so obvious, and I had my finger over the button yet again. I was
Right.
too slow. I didn't like pull the trigger. But I could very easily see this go down against 50% against Bitcoin. Like if we get a Bitcoin spot ETF in like announcement in the next few weeks, I could absolutely see this dump 50% against Bitcoin. And then I could,
Right.
move some Bitcoin into this and be like, I fucking nailed it. So, that's where my head is at with this specific example, real-time example. How do you look at this? And if you were looking to enter a position on this, would you be entering now or would you be waiting for something else? And if you'd be waiting for something else, what does that look like?
For me personally, I'm very much not doing anything until the ETF deadlines pass, at least the first two, or at least till we have some clarity on that situation, some resolution, whatever direction it's going to be. Because I feel like you say, that's going to pump Bitcoin no matter what, and it's going to outpace everything in that scenario. And we know that's happening. We know, like I've got them, mapped out here. First one is beginning of September. Second one's middle of October. So certainly in this time frame, like at least until the middle of October, I feel like you're really pressing your luck if you go in on a big alt position between now and then. I mean, maybe you'll get lucky and you'll buy the bottom and you'll be so glad you did when you look back on it a year later, but like you're kind of really kind of hanging your nuts out there, I feel like, by doing that. Another thing another example that kind of came to mind here is just looking at this optimism chart, because I've been actually tracking this one a little bit closer, and it's almost like a little bit further along. Like if real quick, let's go back and forth with the Lido. Like it didn't dip down as much below its yearly open price against Bitcoin. Lido didn't, but like this kind of bottomed out, and I was watching it come back up because it had like, 2 or 3 really good weeks in a row, or four, I guess you could say, 4 good weeks in a row. And I'm just like, you know what? I don't know, man. I don't know. I feel like this is more just like a mean reversion, and I'm not going to be at all surprised if it gets up to this 20-week moving average against Bitcoin and gets rejected. And sure enough, so far it has. And so far it's back down below its yearly open against Bitcoin. And so I'm kind of looking at this to sort of the canary in the coal mine to kind of get a general sense of what the alt market's doing, because this one was really pumping for a minute, compared to just about everything else that I was watching. And so far it got rejected, right in the center of the bands. And so I this is telling me it's not quite time yet. And certainly with the ETFs looming too. That's really what I'm basing my thinking on.
OP is an interesting one. It's another one of the ones I definitely want to have in my rotator bag because I think it's early cycle. We can talk more about that in a bit. I do feel like, damn, I missed the bottom on this one. I think that recent pump, that's excitement about like the Coinbase base L2 and people thinking, well, it's on the OP stack. I can't buy base the token. So the next best thing I can do to like take advantage of all the news and attention to the base L2 is to buy OP. And I think that's why you see OP pump recently and Arbitrum not follow,
Right.
even though they're both L2s. I think this is a good example of, Quokka this cycle versus previous cycle, where it's like I would have a lot more FOMO to get into this last cycle than now, because I think, actually looking at this chart makes me really want to buy Arbitrum, not to buy Optimism, because I last cycle definitely, like a lot of people, just too many times found myself buying pumps after they'd started. And so much of the gains are often in the first days or week that something pumps. And if you miss that first bit, like your overall returns are like way diminished. So, the more enlightened version of myself actually looks at this chart and thinks, I do want Optimism. I'm not buying it here, but it does actually make me far more interested in buying into Arbitrum sooner rather
Yeah.
than later.
I don't know what to make of this Arbitrum chart. It's just flat. It's just sideways. It's literally not anything. Um,
Yeah.
I can't get a gauge on it one way or the other, and I struggle with it because again, it's just a governance token. It doesn't do anything. It doesn't, you know, accrue any value to it. It doesn't have any mechanic. It's just, why?
As we've
Um,
seen last cycle, that doesn't really matter.
no, you're right. You're
That a token
100%.
could be useless.
Yeah,
Yeah.
you're absolutely right
Um,
there. Um,
let me talk a little bit about my theses around
yeah, yeah,
the rotations for a sec. So there's a couple of different lenses we can look through. One lens is the obvious one that we talked about before. It's pretty well known in crypto circles now. The idea that money flows into Bitcoin first, then as profits are made in Bitcoin, people go further out on the risk curve. The next one is on the risk curve is ETH, and then beyond that is various alts. And we've seen that play out time and again. Happened in 2021. It's likely to happen this cycle. Uh, I suspect it would be likely to happen even if we didn't have the spot Bitcoin ETF sort of narrative going. Money tends to
right.
flow into the safest thing first and then go out. So that's one frame to look at it. Another frame to sort of look at it is right now, the people paying attention to crypto, it's the highest percentage of like survivors of multiple bear markets, really in it for the tech, max gambler types that have been paying attention. And as we start to go up, we're going to get more and more people from like traditional finance, more normies, more like newbies, where the first time they come in is 2023. And so another way to look at it, the likely pumps is probably the stuff that will pump first is the new things from 2022 that like the hardcore base that's still around really cares about. And so that is things like probably like Lido, like Optimism, like Arbitrum, like the best assets in each various sort of sector that people have been really gushing about. And then as we go through the cycle and more newbies and normies come in, they're probably going to come in for stuff that doesn't exist yet, or stuff that just makes a lot more sense to them, like, you know, baseball cards as NFTs. People know what gaming is. People knew what Metaverse was, Ready Player One, that sort of stuff. So, like, you know, I suspect there's some assets like OP, Arbitrum, Lido that will likely have their pump against ETH early on in the cycle, and then they'll sort of max out against ETH and maybe even start to decline against ETH. And then other things that people that don't yet that aren't yet in crypto, like the freshers of 2024, like their stuff will pump much later. So, you know, there are things like gaming and metaverse that I would like to hold assets in because I expect that they will have their rotation and their time in the sun. But I also think that they're not likely to be the ones that have the rotation early in the cycle. And so, you know, right now I might overweight my rotator portfolio to Lido, Optimism, Arbitrum, these sorts of assets, because I think they're the 2022 best performers. They're the ones that everyone's paying attention to that currently is like in the market. And things like Sand, like Mana, you know, various gaming tokens, etc., they're likely to bleed against Bitcoin and ETH for sure. What I don't know, to come back to, you know, it's likely that Bitcoin will pump or dump first and lead, is, you know, one of the best things anyone can ever admit to themselves is they're bad at timing. I'm bad at timing. You know, I do think that something like Lido is likely to pump very early on, like Optimism and Arbitrum are likely to pump very early on. And so I actually think that they probably could pump really early on against Bitcoin. And am I going to be able to, you know, potentially watch Arbitrum and Optimism go down for a few weeks, maybe a month, and buy in then before they have massive candles against Bitcoin that like wipes out all of those like 1 or 2 months of losses within a couple of days, and then get in? Am I going to be able to do that or not? And so what I'm actually doing is I'm going to start, you know, from this week onwards, sort of spreading the risk out and looking like Arbitrum this week. I'll probably buy. I'll probably get my position in Arbitrum this week. It's at support. No one's really giving it any love. It could go down for a few months. It could go down against Bitcoin. But I think when it pumps, it will pump very quickly, and that this position will likely look like a good one. I'd love to get it closer to $1, but, you know, I'd rather have some of my rotator plays bought, even if they do go down, than to not have any of them and then sort of miss all of the early ones. So I'm kind of going to hedge my bets a bit in that sense. The last thing before I shut up and let you talk about rotators is if we just think back about that basic rotation again, like Bitcoin into ETH into alts. One of my mistakes last cycle was really paying too much attention to like what was actually moving and what people were saying. Look, this thing is moving, this alt is going now. And I was only really applying first order thinking. Bitcoin is going up, I'll hold Bitcoin. Oh shit, ETH is going up, I'll hold ETH. Versus thinking, oh, I think Bitcoin is going up, or I think Bitcoin is going to go up. If this, then that. Like if Bitcoin goes up, what else do I think might go up? What else would I have in my rotator portfolio? Well, if people watch Bitcoin go up, they'll probably also think like, what's Bitcoin adjacent? Well, Stacks is Bitcoin adjacent. Maybe we'll see another like pump of Stacks really early on in the cycle. Like I'll probably hold some Stacks, expecting it to pump once against Bitcoin, probably very early on in the cycle, and then I'll sell out of it and move that into something else. You know, the other obvious one is like, well, everyone knows that once Bitcoin pumps in, then the really basic second order thinking is like ETH is next. Well, what's the second order thinking on ETH? Well, yes, it's basically L2s and liquid staking derivatives, right? So that's the reason why I think I'll probably hold those even maybe before confirmation, because often when these things pump, they have their major pump against ETH sometimes in the order of several weeks, and that's where the majority of the gains is. And so trying to get in once confirmation happens just means that you miss out on multiples. And I am not going to have huge positions in any of these things, but I am going to get in before I have confirmation with the price pumping, because I think I'll just miss out on so many of the gains if I wait for confirmation, that I'm going to trust my instinct and using second order thinking a bit more this cycle to get into things before they actually have their pump, so that I can, because when they do, even if I've watched it bleed for a month or two, it's probably going to wipe out that 2 months of losses within like 48 hours. So uh, you just need to look at some of these alts when they do have their pump, and that initial spurt, it happens within hours and days, not weeks and months.
No, you're totally right there. Um, oh, okay, I was just seeing something. Yeah, I think you're spot on. I was just thinking about what you were saying and looking at this chart in conjunction with that, and was noticing, we're at, what's the date? August 9th. And I was looking at this, compared to the 2018 cycle and trying to figure out when did alts really start pumping in this
Mm-hmm.
huge run here. And it was, August 12th, 2019. And we're at August 9th, 2023. So we're, it's interesting. We're roughly coming into the timing band when like you could start to see alts outpace the rest of the market.
Yep.
I mean,
Yep.
just based on the historical pattern anyway. I mean, obviously very small sample size, but like, um, it's interesting, in terms of what you're saying about catching the bottom and catching the rotation early. Um, you're not out of line, at least in terms of the time frame, that you're thinking about
Mm.
here.
Yeah,
Um,
yeah, yeah. That's a good point. I do think it's important when people think about the rotator though, that like let's think about the previous cycle, right? So like coming out of 2018, in hindsight, there were a bunch of assets that did really well. You were super lucky if you picked them at the time. Like everything was dead. Bitcoin was
right.
dead. ETH was definitely dead. To pick any of those things, very lucky. But if you think about from 2018 to 2020, a lot of what did really well, if you were very clued in, was assets around the concept of multi-chain. So you had some L1s pumping like Phantom. You had some assets that would be used for like cross-chain stuff like Link doing very well. Then into 2020, uh, you had the next sort of rotation after that, which was like DeFi summer. If people had finally built some DeFi products, and they were sort of like well built enough that they had that pump.
Right.
Then into 2021, they started dying off, and relative to like ETH, and you had like a series of others. Like early 2020, you had the NFTs pump, and then many months later, you had gaming pump, and then months after that, you had metaverse pump. And if you think about it, each one was like a less established tech than the last. Each one was more like understandable to like a normie than like someone who's a crypto degen, right? Like you're sort of going from like like built infrastructure to financial services to like to pictures of monkeys to like computer games to like we're all going to live in the metaverse. It
Right.
was like this rotation. So when I think about like, oh, I want this rotator bags, and you know, I actually hope that even if I start with 20% of my stack and I rebalance with the rotator portfolio versus the rest of my crypto portfolio, I think if I do it well, that'll actually be the majority of my gains this cycle.
Oh
And
yeah,
so if I
totally.
buy in now like a bunch of these like assets that I think will be the early rotators, and then I rotate the winnings of any of those into the ones that haven't yet pumped, and they just get stupider and stupider as the cycle goes on, and more like normie understandable. I think that's going to be a great way to play it, and that's why like I'm happy to have like start moving a percentage of my portfolio into these things that I think will pump probably at the same time ETH will pump, um, and I just can't time that well enough because it could potentially be so soon from now, so early on in like in this phase of the bull run. But I won't be buying things uh, like metaverse adjacent or gaming adjacent, or even necessarily like NFT adjacent assets in that rotator portfolio yet. Those are like examples of things that I expect will be like late cycle pumpers. And so, if you are thinking about having a rotator like portfolio, like you probably want to be majority stacking that with things that you think are going to pump really early in the cycle, not things that are more likely to pump late in the cycle when you have a whole new class of new people coming in for new reasons.
Right, right. Interesting. So one thing I think about with that, with what you're saying, is one of the things that I get hung up on is I've followed a similar thought process. Trying to load up on the ones that I thought were going to do well throughout the cycle, and I'm kind of focusing on the bottom of this alt chart here. But one of the things that really took me by surprise and caught me off guard was I loaded up on a bunch of stuff, all through this late 2019, early 2020 stuff. I had my conviction plays, and then out of nowhere comes DeFi Summer, and like all the shit that I never even heard of, Uniswap and all these
Yeah,
Dexes and Aave and Balancer and Curve, and suddenly those are like what everyone's talking about, and nobody's talking about any of this stuff that I had loaded up on, and I'm like, well,
yeah, yeah.
wait a minute. What do I do now? And so looking down, DeFi Summer, I remember it happened, and then it peaked right around somewhere in September, like September 1st or something like that. It peaked, and so I'm assuming this was the down part of that, and then this is when Solana blew up, and so Solana didn't even really exist until I just looked like May 2020 or something like that. So again, I'm loading up on XYZ, blah blah blah, way back in here. Meanwhile, Solana comes along and becomes the biggest gainer in the space. Luna comes along, becomes the biggest gainer in the whole cycle. Um,
Yeah.
and it's like you have to kind of go, okay, well, I've got this strategy, I've got this idea, but also there's things that might do better than all of this that don't yet even exist or are worth,
Oh yeah,
a
yeah,
fraction of a
yeah,
penny right now that's not on anyone's radar. Um,
yeah.
and so I need to figure out how to like kind of manage that too and like have a plan for that also.
Yeah, I think that's really important. That's why I think like if you're like the way I'm approaching it is this like my we'll just make easy numbers. Um, my rotator portfolio will be 20% of my stack. Let's say well, I got 40% Bitcoin all cycle, 40% ETH all cycle, just hodl till end of 2025 probably, and then 20% in my rotator stack. I'm going to buy my 10 assets that I like the most, that I think are going to be early cycle pumpers, but are going to be across like 5 different sectors. So, LSDs, it might be Lido. L2s might be Optimism Arbitrum. Alt L1s will be sold, et cetera, et cetera, et cetera. And I'll pick like 5 cycles I think are the earliest, because sectors, sorry, 5 sectors seem like they should be early cycle pumpers. So, sectors tend to pump out of sync with each other. So I don't know which of those 5 is going to pump first, but when one of them pumps, I'll have caught it and I'll sell it and rebalance it into the other 4. And I'll also be looking as the cycle progresses to see like what are the new things coming in, and like are the things in my rotator portfolio still the right ones? Sometimes you have to wait a long time. I held XRP almost all of like from from May 2017, and it was just flat until like November. And I watched it while every other fucking asset pumped again, like against Bitcoin. Bitcoin pumped, ETH pumped, like all these other shitty assets that don't exist anymore. They all pumped, and ultimately, XRP did a 10x, but it was all in a month from like November, December after being flat for 6 months. So, by having a portfolio spread across multiple sectors, you know, you can sort of like you don't have to worry about like missing, because you hopefully catch one or two, and then you don't have to feel so bad if you know some of the bags you haven't pumped yet, because also some of the ones you have, and then you can rotate out of them and say like they're just not going to pump against ETH for the rest of the cycle, and you can like let's say 2 out of the 10 pump, you can add 2 new ones as well, and redistribute the profits
Right,
across like
right.
all 10. I think that's the best way to do it. We've talked about it a bit. Like I really do think one of the hardest things about crypto, particularly if you're like us and we're really in it, man, like there's like a fine line between like, are we investing or are we gambling? Like how much opium is involved here? Like so much of like our hopes and dreams for the future are wound up in it. And when bear markets happen, it's like so much pain. And there's so much regret in bull markets and bear markets when you feel like you miss something. And so actually, one of the things I think about with this cycle is I don't want like, I'm actually not trying to like maximize gains. It's a bit more nuanced than that. Like I want to do well with my gains, but I also want to make sure I minimize regret, because regret is painful. It's really fucking painful to
Yeah.
feel like you missed out on everything. And like for me, right, like 2021, my net worth in dollar terms in January was pretty much the same as December because Bitcoin went nowhere
Right.
in 12 months. And the regret I had for missing out on NFTs, for missing out on gaming, for missing out on metaverse was just so painful for me. And I don't want to go through that again this cycle. It causes me to make bad decisions. It causes me to like FOMO in too late into rotations, you know, et cetera, et cetera, et cetera. And so I'm going to spread myself out a bit more, even if in the end I look back and I think, wow, if I been a bit more concentrated, maybe I would have done better. But I really want to make sure I minimize regret. And the two ways I'm doing that is I'm going to be more spread out to catch more themes. And you know, when I get out at the end of the cycle, like to get the fuck out.
Right.
Those are the two ways I'm looking to like minimize regret this cycle. I think that's really important, just to be able to make good decisions through the cycle. And honestly, it'll probably also improve my performance this cycle if I do that.
I think so too. I think that's a great plan. Yeah, I like that. I like that. Um, Probably want to wrap up here soon. But one last thing I kind of wanted to point out, I was just observing as you were saying that. It's funny. So we have on the ETH and the Bitcoin chart, we've got bearish divergences, pointing to the downside, and on the alt chart, we've got a bullish divergence and this bears damage flag pointing to the upside. So possible low for alts for now, possible uptick in
Mm.
alts. Again, something to pay attention to. So it goes back to your going to buy Arbitrum next week. You might be onto something there. You might be catching the knife, as they say. So I hope so.
Yeah. Well, I hope I'm not catching the knife, but I hope it is the bottom. But
Yeah,
yeah, it may well be it. You know, I there are a bunch of reasons I can look at the chart and think like this isn't the right decision. I just know that like I've seen enough times like when things pump, it can happen so fast. It's just
right.
uncatchable.
Yeah,
And you know, there's so many examples of assets that we can look back at that were bleeding for like 10 months. And then in 2 days, like the pump is so powerful that it undoes 10 months of bleeding. Like there are
well,
so many examples of that. Um,
Bitcoin Cash, like,
yeah, I mean, just look at that, right? Like by the time you waited for thought to look at Bitcoin Cash and then like made the decision to pull the trigger, like 6 months of losses have already been erased.
yeah,
So
I
and
mean,
then you know, then you're trying to bleed like squeeze too much out of it because you got in late, and then you probably hold on to it too long, and then you underperform on the back end of that trade as well.
right, exactly. And you buy here, and then yeah,
Yeah,
no, totally, yeah. I mean, it happens that fast, and particularly in a bull market when things are raging, it is so hard. I mean, it's like, oh, just be nimble, but right, like literally 2 days can be way too late, and by that point you're just
yeah.
like, I missed it, it's gone. So
It's something in the order of like I looked because I have to do my taxes, but like in 2021, as an example, like 90% of my short-term trades, like oh, I want to buy this thing because it's pumping. I had losses, capital losses on those. I basically lost 9 out of 10 bets like that. And the reason is I didn't buy into things until I waited for like other people to tell me and the chart to tell me this was a good asset to hold. And by that point, the pump had already started. I missed out on literal multiples. And as I've mentioned before, can be too slow to get out. And so like just hoped that they
yeah,
would keep pumping. And of course they just sort of bled out afterwards. And like, you know, I'd get out basically when they started going red on my losses and just be like, wow, that's another pump that I misplayed. In too
yeah,
late, out too late. And
yep,
this time around, I want to be in too early and then out like a bit too early as well. Because you know, when these things dump at the end, they often dump like 40% in a day.
right,
So
right.
uh, yeah, I want to flip
um
that on its head this time.
well, yeah, no, I think that's great. I think that's a great idea. And I'm, like I said, I'm, similar philosophy, a little bit different tactical approach, but yeah, I'm right there with you in the way you're going about this for sure. Um,
Yeah.
yeah, that's awesome. All right, man. Well, I think we've gone on long enough here. There's not many people left, but yeah, no, this was great. This was, I think, a lot of fun, and I'm so glad we came back and did this and talked about these rotations and did kind of part two of last week. So this was good stuff, and We'll have to come up with something to talk about again here going forward. But yeah, thanks for doing this, and yeah, thanks for coming on.
Yeah, this has been great, and I feel like I think both of us, like, we're evolving and developing our like theses of how to play the cycle, like literally week on week. So like
Right,
I keep having new thoughts about how I want to do it, and like even this conversation compared to the one we had a week or two ago, like
right,
included like a whole bunch of new sort of thoughts that I've had on things. So I'm sure we'll have plenty more to talk about in a few weeks.
for sure, for sure. All right, well, thanks everybody for watching, and thanks everybody that's still here for watching. And I will see you on Friday. So bye, everybody.